What is good, guys? Third episode of the series, going from $80,000 in payouts this year to 150k. Now, this week was a pretty slow week. We did still manage to take some payouts, but it was a very slow week with not many trades at all. So I will recap every single day and my thought process going into the day and why I didn't take many trades. This is the reality of trading. Not every week you're going to be taking a trade every single day and having crazy weeks. Some weeks are slower, some months are slower, but over the year, if you can make consistent progress, that is all that matters. So here is my journal for the week. As you can see, there were literally no trades all week. So on Thursday, I did take one trade across my 5 Lucid accounts because I needed one winning day, and there was a setup that was half decent, but it was outside of my trading hours, so I took it for an $150 winning day. Now, this is something I don't usually do, but I've decided that over the next few weeks, I have some pretty good balances in my Lucid accounts, so I'm going to just try and meet the winning days and just rinse the balances down and then start to build them back up from there, because it seems silly not to take the balances out. Some of my accounts have like a 6k buffer, so if I can take a 2k out, maybe then another 1k, and then start to build them up, it just seems like a good idea to me. So I did only take one trade on Thursday, which I will show, and I will show you guys why I took barely any trades this week. Before I do that, let me show you the payout I managed to take on my Lucids from this winning day. So it is just here. I only took this across 2 accounts, but I will be taking a payout across all 5 accounts hopefully this week. If not, it will be the week after. So we have had another 3k week. Even though it was really slow, we have managed to take money out of the market. So that is 2 weeks in a row that we have had over a 3k week. And these are not even very good weeks at all. These were 2 very slow weeks and we've still managed to take a good amount of money out of the markets. And this is what you can do sometimes. You'll have really good weeks where you can risk heavy and take good trades and be up a good RR, and then when the slower weeks come, you can just meet that winning day and still get paid. So let's jump into Monday and see why I took no trade. So I was actually live for Monday. We got our bias absolutely spot on. I didn't post it in the daily bias section in my Discord because I was live for the session, but there were still no trades. So coming into this Monday, I was extremely bearish, and I wanted us to come down and fill the whole of this new week opening gap. When you look on the hourly, the new week opening gap looks like it is just here. But you need to go on the lower time frames when you're looking at your new week opening gaps, because if we go on the 5 minute or the 1 minute, you can see that that's actually not the new week opening gap. The new week opening gap is here. If you don't know what a new week opening gap is, all it is when we close the market on Friday and it opens back up on Monday or Sunday night, depending where you are, we make this gap. So it can be a bearish gap, it can be a bullish gap. Sometimes we don't even make a gap at all, but with all the news coming out at the moment and stuff like that, we do tend to get quite a big new week opening gap. We had about a 200 point new week opening gap the last 2 weeks in a row, and it is literally just the difference in price where we've closed and then opened back up. And as you can see, we make this gap where there's just no candles. This is a really good imbalance to target. It's like a really strong fair value gap, I suppose you could think of it. But most of the time we do fill all of it. We don't have to. Sometimes we'll just fill 50% of it. But it is unlikely that we do leave a new week opening gap just left. So as I said, my bias was extremely bearish down to fill this gap. So my bias was bang on, and as soon as we came down and tapped into that new week opening gap, as well as sweeping a low inside of that, we had a really good reaction to the upside and we saw a 1 minute IFVG. So now, why did I not take this, and why did I call out that this is a bad trade to take? Although this kind of looks good on paper, like we swept a low inside of it, we've tapped into it, you are longing when we have still probably 200 points left of a new week opening gap at your stop loss. You want to have high resistant liquidity at your stop loss, and you want to target low resistance liquidity. In this scenario, you have the biggest, like really good A+ drawn liquidity, and it is a massive new week opening gap at your stop loss. Why would you want to take a long when you know, even if you can catch a 1-to-1, the market wants to come down to this? Why would you take something against that? Straight away, this just came down and failed. There was actually a decent short here, and I did say on stream, like, if you're bearish and this is your model, take this. It wasn't my model, sadly, as we didn't sweep a high in a fair value gap. If we swept this small 1 minute high, I would have been open to taking this, because although it is just a 1 minute high in a fair value gap, I am open to taking a lower time frame high or low in a fair value gap if we have an A+ drawn liquidity below. So this was also a 5 minute gap we would have tapped into while sweeping this lower time frame high in a fair value gap. 1 minute IFVG to the downside, and you can target the rest of this new week opening gap. So that would have been an A+ trade, but we came a couple of points away from not sweeping it, so there was no entry for me. I didn't feel like we were delivering out of anything. If you did take this short, it's not awful, but you're kind of just taking the trade based on this 1 minute's going to fail. not based on that we have any delivery, because we didn't tap into that 5 minute. So for the rest of the session, we did just rally down and we did fill the whole of this new week opening gap. I couldn't see any scenarios where I could get an A+ out, so I did just get off the charts. But bang on bias, we predicted exactly where the market wanted to go, so we'll take the positives and move on to the next day. So again, on the next day, we had no trades, so let's look over it. On this day, I put in my daily bias before the session, as you can see here at 225. I'm leaning bearish to this monthly gap. We had a monthly fair value gap that we were currently inside of, but we had another monthly gap below that was a really, really good target. The higher the time frame, so fair value gaps are a really good draw on liquidity. Unmitigated fair value gaps, we're likely to tap into them. When it is then on the higher time frames, like the daily, the weekly, the monthly, it is an A+ draw on liquidity, and we are more than likely going to come down and hit it. I actually had a call with the VIP students pre-market, and one of them actually said there's a monthly gap below that looks like a really good draw on liquidity. So they're actually finding it before I've even had a chance to go over it, which is really, really good to see. Off of open, we did just rally down and we did hit that monthly fair value gap. Off of that monthly fair value gap, there were really no trades to take. We didn't sweep any lows inside of anything. The way that I trade, I have to see a low or high inside of a fair value gap swept. So there were no scenarios for me to take a long or to take a continuation short, because I just felt like it wasn't A+. There was nothing on this day that was super high probability. So again, I took no trades, but that's 2 days out of 2 that we've got our daily bias absolutely bang on. If you check my YouTube channel, I did just post a video as well going over how I find my daily bias every single day. And honestly, it is right 8 or 9 times out of 10. So if you can get the draw on liquidity right, yes, there were no trades these 2 days, which is absolutely fine. But if you can line a trade up with your draw on liquidity, you are going to make money. After this, there were literally no entries. We kind of just messed around and started to consolidate. So I just got off the charts and called it a day. On Wednesday, we had FOMC. So when we have FOMC meeting minutes, I am fine to trade. But if we have an FOMC speech in the afternoon at 7 p.m. in the UK, usually, I'm not looking to trade AM session, because most of the time it is really choppy and low probability. There's not that volatility in the market. So if you see a trade that looks A+, it may just fail because you don't have that volatility to push you in that direction. Now, that's not to say that FOMC is always going to be bad, but the majority of the time, if I took a trade every FOMC over the year, I know that my win rate is not going to be great and I'm probably going to be red. So why would I trade a day that I know coming into the day already is probably going to be lower probability? So the 2 days I don't trade are bank holidays and FOMC speeches. It was a bit of a frustrating day because I didn't look at the charts during the day. I didn't want to force myself to take a trade or do anything that would mess with my psychology, but I did have a look over the charts later on. And yes, this is in hindsight, but even my students sent me this and said I would have taken this trade. So over the daily bias, going over that, we were respecting a 30-minute gap. We inversed a 30-minute gap to the downside. So we had a really good draw on liquidity below, being this 30-minute low. And we also had another 30-minute low down here that was another really good draw on liquidity. But as you guys know by now, what am I looking for? I'm looking for a high in a fair value gap to be swept. So we put in this 30-minute high inside of this fair value gap. And then what did we do off of open? We came up off of open. We had a really good sweep of that high. And then we had a 1 minute IFVG here. So I would have had my stop loss at the highs and I probably just would have targeted a 1-to-1, or you could have gone for this 30-minute low down here. My break-even point would have been this swing low down here. So this was a super A+ trade and I 100% would have taken this if I was trading FOMC, but as you guys know, I don't trade FOMC days. So if you were and you did take this, really well done, because this is an A+ trade and this is the trade I would have taken had it not been FOMC day. Unfortunate because we could have been green on the week, but sticking to our rules has actually not helped us massively this week. But, you know, that's a short-term mindset. If you think in the longer term, it is going to help us, and trading is a long-term game. Now on Thursday, no trades again, but if we look at our daily bias, extremely bullish today. My Wi-Fi has been awful today. Apologies for the late bias because I posted this 2 minutes before open. We have 4-hour highs above the target. So we had this high all the way up here. We had another 4-hour high and another one. So that furthest high was about 550 points away when I posted this. And then look, so daily bias, bang on. I do this every single day. And then that's when I made this daily bias video because I had a lot of people asking me how I've got it right. Literally the last 2 weeks, I don't think there's been one day I haven't got it right. And sometimes I feel like if I was to just take a trade, just going for a 1-to-1 with the draw on liquidity, I would make money. So this is what I tested on this day. So I just went with the lowest risk possible. I went in with 1 micro and I just went for an $150 day. I actually scaled just before this because I didn't want to go over $150. So as soon as I hit $150, I just scaled the trade. So that's how I made $150 times 5 accounts. So what's that, $750 on this day. But that was literally just going for the drawn liquidity. There were no trades for my model again. How did I find my daily bias on this day? So firstly, looking at liquidity, we have hourly LRLR above. This is a really, really good drawn liquidity. When we have LRLR, we often run it really fast. When we start to get to this first high, usually we do tend to run it all. So this top high as well was an hourly high inside of a fair value gap, which, as you guys know, is my favorite drawn liquidity. It was about 400 points away. I did post it a little bit earlier and it was almost 500 points away. So we did call out a 500 point move, which is pretty crazy. These market conditions are very volatile, but these were the 3 highs that were my main targets today. As well as that, we had an hourly IFEG here. So we inversed this to the upside. As well as doing that, what did we do? We came down and we respected this hourly fair value gap perfectly and had a really, really good reaction, which then resulted in us inversing this gap. And it is so obvious that we have this LRLR. We've respected bullish PDRAs, disrespected bearish PDRAs, and we have these 3 stacked highs above. 100% we are flying up to those in this session. And as you can see, that is exactly what we did. We just flew up on this session. There was one really good setup that did happen down here, and this is my ideal scenario for the day, which I will just show you. So we had a 5-minute low inside of a fair value gap. After that, I was looking for a 1-minute IFEG, but sadly we did not get it. Now I can't get the 30-second time frame on here to show you, but there was a 30-second gap around here that we had a really good IFEG with great V shape, great displacement. So I would have had my stop loss at the low here, and my take profit would have been at these highs, and it would have been for about, I think it was about a 1.5R, so maybe it was somewhere around here. So due to swing off of open, sweep of a 5-minute low in a fair value gap, we're very bullish on the day, and it looks a lot cleaner on the 30-second. Obviously, I can't get that on here, but that was the trade of the day. Personally, I don't trade the 30-second. I think there's too much going on. There's too much noise, so I tend to just stick to the 1 to 5 minute. But this was an A+ trade. So after I saw this happen, that's when I entered my trade, just going for a 1-to-1 with the drawn liquidity. I thought this is going to send us higher. We're 100% bullish. So I literally just went for a 1-to-1. I think I went in with 1 micro and I literally just went for a 1-to-1 like this. I wanted to go for the drawn liquidity, but obviously it was way too far away to just risk $150 because with 1 micro, which is the minimum, I would have been risking $400, which I didn't want to do because it was just going for a quick trade just to get that $150 day and get the payout. Because the way I thought about it, I could take a win today. No, I could take a loss today, sorry, and I could take a win tomorrow. And it's a 50% win rate, and I haven't made or lost any money, but then I have got that winning day, which means I can then request the payout. So it wasn't really something I was doing for the money. I was just doing it to get that winning day. So that is 4 days out of 4 that our daily bias was absolutely bang on. Obviously, we didn't trade FOMC, but the bias going into the day was still bang on. Now, on Friday, again, there were no trades, so let's recap why that was. So I don't usually do this, but at 11:50, which is obviously pre-market, I will still post my daily bias later, but I do feel like we're going to dump down to this LRLR at some point today. So I posted this here, which was for about a 2 or 3R stop loss at the high, and you could have shorted to this LRLR. So obviously I didn't take this, but I posted this, which I don't usually do, like I said, but it just looks so obvious to me, and we were respecting this 15-minute gap at the time. And it was actually just over a 2R, and that is exactly what happened. We held the gap and we dumped down towards this LRLR. We did end up coming all the way down and taking it all. But I said to people, if you did take that, I would just scale all at this low. Then pre-market at 2:25, I posted this. I said, not an obvious bias today. There's an hourly IFEG to the downside, like you can see here. I put we're probably going to inverse this 30-minute to the upside on market open, so I'm happy to take a trade in either way. If the 30-minute is respected, I'll be bearish, but I said I doubt that because this V shape, we swept that low. It looks like this 30-minute is going to inverse and we're going to come for these highs. So I then put, at 2:30, I put the 30 minutes going to inverse, these highs should hit, and posted this picture. And then bang, we literally flew up to it off of open, so let's recap it. So like you can see here, we had that 30-minute IFEG. So this sort of, I guess you could call it LRLR above it, is just stacked highs, I suppose, was a really good target. Sadly, I did not catch a trade in line with that, but off of open, we literally just flew up and took it. So again, it just feels like it's been a week where there's not been that many trades, but I've analysed the market perfectly every single day. Now, in the call I did pre-market with the VIP, I said if we come up and sweep these 30-minute highs, the top high is actually an hourly high inside of a big fair value gap to the left, which you can see over here. So if we sweep that and manage to see a really nice IFVG, I'm happy to take it. I also said ideally we would come up and see this hourly high, which is only small, but it's in a fair value gap, swept as well as taking that. So we had a really nice protected high above. So now I'm thinking, okay, can we catch a short off of this? Now we did start to dump down. There was a really nice 1 minute here, but as you guys know, I take the highest time frame IFVG, which was a 3 minute. So this 3 minute had not yet inversed. I really wanted a good close on this so that I could take a short, and I would have just targeted this sort of internal low down here, and my break even would have been the 5 minute, which I'll show now. So I would have had my stop loss at the highs like this, and I would have just gone for these lows, or maybe a little bit further, just at a 1-to-1. And my break even, like I said, if we look on the 5 minute time frame, we did have a 5 minute fair value gap down here that I would have had as my break even. So when we actually got the 3 minute close, I hoped we were going to close here. We didn't. So we then swept my break even point on the entry. So it was an invalid trade. We did end up just shooting down. So bang on bias. And I even said, once we hit our drawn liquidity for the day, recognizing what type of drawn liquidity it is, it's a high in a fair value gap, you can look for a short too. Those are the two scenarios, either a long up, or if we do get our bias right and we see that swept, then you can look for a short. So no entries today, and it feels brutal because every single day we got a bias bang on 5 out of 5 days, but no trades. How does that work? How have I analysed the market perfectly every day and not been rewarded? So it is what it is. It's been a tough week, but holding that discipline, sticking to your model is what's most important. I may have an account. I've seen a lot of you asking me to do this. I may just get an account where I just trade it as drawn liquidity, like I find my drawn liquidity for the day and I test it just going for a 1-to-1. This may be something I document and do sort of as a test on one account, but this is just not how I want to trade long term. I know my model works, so why would I change it? So yeah, that's how we ended the week, up literally $150 on 5 Lucid accounts. So we managed to take that payout, but a very, very slow week. So let's see if we can have a better week next week. Thank you guys for watching. There will be another one of these posted next week, so stay tuned. If you're not already, hit that subscribe, leave a like and a comment, and I will see you guys in the next one.